Hello everyone. In today's video, I want to share some important rules that I learned during my journey studying and exploring the world of investing and trading. And without wasting your time, let's jump straight into the first rule. Rule number 1. The market is not a place to get rich quickly. Many people have heard this before, but the truth is that most of us enter the market because we want to get rich fast. I've met many traders with this mindset, and honestly, I was the same in the beginning. Of course, there are some lucky people who become rich very quickly. For example, someone might invest in a coin at the perfect time and suddenly make a huge profit. But situations like that are very similar to winning the lottery. And usually, what comes quickly can also disappear quickly. When people make money too easily, they often haven't experienced the difficult phases of the market. They haven't gone through the worst moments. Because of that, they start believing that trading is easy. This leads to overconfidence, and sooner or later, many of them end up losing everything. In reality, it took me several years before I started seeing real results. But that doesn't mean everyone needs to spend that much time. The speed of your progress depends on how much time you spend practicing every day and whether you start on the right path from the beginning. Unfortunately, I didn't start on the right path. I'm naturally a very curious person. I like learning new things and exploring different ideas. That curiosity helped me a lot in school and work. But in trading, when I look back now, curiosity was actually my biggest obstacle. At the beginning, I discovered the market through a broker. After that, I joined signal groups, traded on unreliable exchanges with high fees, and sometimes even paid 10 to 20% just to withdraw my own money. Only after experiencing those problems did I start researching how to choose reputable exchanges with proper international licenses. That's when I realized something very important. Nothing in this field is easy. If you want to succeed in the long run, you need to build your own knowledge instead of relying on others. Because of my curiosity, I tried almost every tool, indicator, and trading method people were sharing online. I even studied materials from foreign sources. This period was very important because it opened my mind to many things. But it was also the most time-consuming stage of my journey. I spent years testing different indicators, tools, and strategies. Some of them helped me learn valuable lessons, but many of them were completely ineffective. Because of that, I lost a lot of time, literally years. At one point, I even stopped trading for a few years. Later, when I came back to the market, I ended up spending a large amount of money just to learn the lessons I should have learned earlier. Let me explain it with a simple example. Imagine you have a key that opens a door. If the correct key is right in front of you, you simply pick it up and open the door. Trading is the same. If you have the right strategy, all you need to do is practice it consistently and follow your rules. But curiosity often makes us learn too many different things. We end up collecting many different keys, but most of them cannot open the door. And the more keys we collect, the harder it becomes to find the right one. That's why people often say, the more you know, the easier it is to get distracted. For me, curiosity became an obstacle until the moment I finally found the right key for myself. But even after finding it, I had to spend more time forgetting the unnecessary knowledge that was filling my mind so I could focus on what really mattered. In trading, learning too much is not always helpful. You only need about 10% learning the right things, and then 90% of your time should be spent practicing every day. Real improvement comes from a simple process. Do, make mistakes, and correct those mistakes. The faster you correct your mistakes, the faster you improve. Rule number 2. Start with a small amount of capital. This rule is extremely important. Most people enter the market dreaming about making a lot of money. They imagine a bright future with big profits. Because of this, many beginners start trading with large amounts of money even when they have very little experience. But think about this. If you cannot consistently make $5 or $10 per day, or even make steady profits on a demo account, how can you expect to make $100, $200, or even $1,000 per day?
It doesn't matter how much money you currently have. Even if you have a lot of capital, as a beginner, you will still make mistakes. Making mistakes is completely normal. It's part of the learning process. What we regret is losing too much money because of those mistakes. That's why you should start with small capital. Your progress.
This brings us to rule number 4. Always follow your strategy. This rule is really about discipline. You might know many trading strategies. You might even learn some of the most effective methods out there. But when you actually start trading, things become very different. Sometimes you can't recognize setups quickly enough. Sometimes you get confused. And many times your emotions take control. Maybe you really want to make more profit. Or maybe you just lost a trade and you want to recover that loss quickly. Because of that, you feel the urge to enter another trade. Let's say your trading system has 5 conditions that must be met before you enter a trade. But when the market meets only 3 or 4 conditions, you already enter the trade. At that moment, you are not following your strategy anymore, and naturally, your results will also be affected. Let me give you a simple example. Imagine your trading rules look like this. You open a buy trade only when, first, the market has a clear uptrend. Second, the price pulls back to a strong demand zone. Third, a clear entry signal appears, such as a double bottom pattern. Fourth, you do not lose more than 2 trades in a single day. And fifth, the risk per trade is $100. Now, imagine the market is clearly trending up, and there is a strong demand zone. The price pulls back to that zone. But because you are eager to enter a trade, the moment the price touches the zone, you enter immediately. Or maybe the market has only formed one bottom, but you already enter the trade because you don't have the patience to wait for the complete double bottom pattern. When you enter too early, the setup is not fully confirmed. The price could drop further, or after forming the first bottom, it might bounce a little and then continue falling. In those cases, your probability of winning becomes much lower. Another situation could be this. Your entry setup actually satisfies all the technical conditions, but earlier that day, you already lost more than 2 trades. From your past experience, you know that when you lose several trades and try to recover quickly, it usually means you are no longer thinking clearly. And the more trades you take in that emotional state, the more likely you are to lose. That's why you created the rule, no more than 2 losing trades per day. So even if the setup looks perfect, if you already broke that rule, you should not enter the trade. You must follow your rules strictly, because those rules are based on your past mistakes and experiences. And just to be clear, I'm not saying that the example rules I just mentioned are necessarily effective. Every trader must test and verify their own system using historical data, a specific trading instrument, and a specific time frame. You may also need additional rules to improve the win rate. So in this example, the rules are just for illustration purposes. Now let me give you a much simpler example that has nothing to do with trading. Everyone knows that if you want a fit body or 6-pack abs, you need to exercise regularly and eat healthy food. Finding the right workout plan online is actually very easy, but many people still don't do it. Why? Because they lack discipline. The same thing happens when people want to learn English. Finding good learning methods is not difficult, but many people still fail because they don't stay consistent. Trading is exactly the same. Most traders lose not because they don't know enough strategies, but because they lack discipline and don't fix their mistakes. And to be honest, finding a truly effective trading strategy is much harder than finding a workout routine or an English learning method. That's why discipline in trading needs to be built step by step. If you know that every trade needs a stop loss, then build the habit of always placing a stop loss. If you know that you shouldn't open too many trades in one day, then limit the number of trades per day. If you know that risk management is important, then make sure your position size is calculated properly. Don't expect to learn some magical or advanced strategy if you cannot even follow these simple rules. Because even if someone gives you a great strategy, the real question is, will you actually follow it?
That is exactly why discipline is so important in trading. If you want to set a goal, don't focus on becoming the best trader or making the most money. Instead, try to become the most disciplined trader you can be. Now let's move on to rule number 5. Always review your trades. If you don't have this habit, it can be very dangerous, because when you don't review your trades, you will never know what mistakes you're making. There's a simple rule for learning any skill. Do the work, review the result, fix the mistakes. Then repeat the process. Do the work, review the result, fix the mistakes. Over time, you will gradually eliminate your mistakes and improve. That's why you should always track your trades. For example, earlier we talked about entering trades based on a double bottom pattern. After collecting enough data, you might discover that on a specific currency pair and time frame, this pattern only gives you a 40% win rate. In that case, you need to ask yourself, is this really a good setup to trade? If you never track your trades, you will never know the answer. If someone gives you a strategy and you start using it immediately, how can you know whether that strategy really works? But if you carefully record every entry based on that strategy, you can evaluate the results and determine whether the method is effective. Only after that should you start applying it seriously in real trading. The same process applies to every rule in your strategy. Remove the rules that don't work, keep the ones that do, and gradually combine them into a complete trading system. A simple way to do this is to take screenshots of your trades and record them in an Excel file. This makes it much easier to track and analyze your performance. In reality, there are many more trading rules that we can learn and improve over time. But in this video, I wanted to share 5 of the most important rules that can help you in your trading and investing journey. And remember, don't just watch this video. Practice what you learn. Apply it consistently. Doing this can save you a huge amount of time, effort, and money compared to learning everything the hard way like I did. I wish you all good luck, strong discipline, and the determination to never give up. Thank you for watching, and I'll see you in the next video.